I want to ask you where we go here with this A-share market, because it's gotten to a point where it's gotten the market kind of divided. I mean, you have the likes of BlackRock, for example, is starting to trim its positions and look at other places in Asia. On the other hand, you have Goldman, sell side and buy side there, might be looking a little bit more bullish on China. Where are you on this debate? What do you see happening here?
Well, my take is that if you continue to go up, start trimming position, I tend to think in this line of thought. The background is that, right now, actually, every market, not just China, every market is, the stock market basically is ahead of business fundamentals. Valuations becoming stretched, not very stretched at this moment. So, not the kind of crazily stretched, but becoming stretched. So I think the situation is that if it continues to go higher, it's probably the time to be a bit more cautious.
Cautious in what? How would you act on that information? Would you rotate from the winners to the laggards, or would you pull out of the market completely and wait for this to pull back?
At the moment, when we look at the China market, it seems that the stock market performance very concentrated in the group of what we call new economy consumer stocks, which generally speaking are trading at easily 20, 30 times PE. But the earnings growth, actually, even if you believe in the market consensus earnings growth is like low 20s or even high teens. So in a way, I think I'm more concerned about this group of high-flying market darlings. At the same time, what we have seen is that the Chinese economy, particularly, for example, the investment side of the economy, starts showing signs of picking up. But some of the old economy stocks like industrials, commodities, and banks are still kind of like a laggard because earnings outlook for them is still rather lackluster. So I probably will strip some of the money to this older economy stock, which I agree don't really have a great growth story. They are not. You are not expecting to really grow that fast over the years, but it seems that the valuation gap is increasingly becomes too large to me. So at this stage, I probably will stay in the Chinese market, but I will tilt towards the stocks that are more value biased.
Vincent, I'm intrigued as to your views on consumer-related stocks. You say that consumption is expected to rebound. That's what you're saying. But you say also that it's going to hit a ceiling. If you take that into consideration, then, how do you position around consumer stocks?
Well, it's exactly what I said, is that if you look at consumer activities, well, we know that consumer activities today in China is definitely better than 3 months ago. But we also know that the kind of lockdown, quasi-lockdown, temporary lockdown measures will always be with us for some time, probably throughout the year 2020 and maybe even extended to 2021, which means that for the full year of 2020, retail sales growth in China probably more like zero growth, even if you assume a meaningful rebound in the second half of the year. So with this in our mind, then look at the consumer stocks. Quite a lot of them have been trading at really, high premium. So if you ask me, I tend to say that, look, it seems to me that the market is very much, well, with the support of liquidity, putting too much positive expectation into the consumer stocks already. So I'm tending, consumer stock is, for me, it's like new economy stock is more on the a little bit ahead of fundamental side.
You touched on liquidity, and arguably this is partially a liquidity-driven rally that we're seeing here in China. What are the risks, and are they being underestimated, around a change in monetary policy here?
I think this is a very good question, because if you look at the total social financing data from China in the first 6 months of this year, average every single month, the new total social financing is about 3.5% of GDP, China's GDP, which is the highest level since year 2010. The last big stimulus program. From 2011 onwards, you never have any one year with this kind of level. So I would say that with the Chinese economy increasing, showing signs that it will achieve the 2 or 3% growth target. Well, anyway, the government has no formal growth target, but the rumor growth target is like 2 to 3%, is, I think, entirely achievable. On the back of it, will the monetary policy, I'm not going to say that it will become very tight, but will it become more selective? I think that will be a concern. So my take is that will the liquidity continue to be as strong in the second half of the year as in the first half of the year? I think it's really questionable.
So put that all together for us, Vincent, including some of the steps that Beijing, seemingly a coordinated sort of set of steps that announced last week to send a signal to the markets. What message do you think was coming out of Beijing when it came to what was then a red-hot stock market? Do you think they're trying to cool this market down?
Well, I think Beijing wants a healthy, long-term, mild bull market. The question is whether the recent bull market is already being seen as not so mild from the Beijing authorities.
Okay, Vincent, my other question for you is, I mean, you've watched this market for many, many years.
Yeah.
You know, what we've put in a chart, the gains that we've seen in 2020, we've put that against what we saw, that bull market in 2006 to 2007. 2014 to 2015 was another bull market. Yeah. You barely see what's happened this year compared to those previous episodes. Now with the market more accessible to foreign investors, and we know, of course, that foreign investors are massively still structurally underweight China, is there a case to be made that this is simply the start of a bull market, structural bull market in the Chinese A-share market?
Well, what I would like to predict is that, okay, the total market cap of the China market will become bigger, the Asia market will become bigger after this rally. That I don't doubt. But whether in 2006-07, in 2014-15, both markets have gone into crazy valuation and then crash. I think this is something that the authorities will try to avoid. And I think foreign investors, if you assume most of them are institutional investors, probably also will become more cautious about the valuation, individual valuation of the stocks. So the most likely scenario in this time is that when the market has a certain kind of strength, you will see more IPO coming into the market, take away some of the liquidity, and then, on one hand, it led the market to fulfill the function of being able to raise capital. On the other hand, you prevent the market going back into the kind of valuation, peak valuation as we saw in 2006-07, as well as 2014-15, which actually all end up with a bust. So I think the key issue is that if the authorities can really get what they hope for, and I think this time, probably, I'm not saying that the authorities can really manipulate the market, but with the players change, as you mentioned, more foreign institutional investors, I will see the market probably will become more mild. It might go up, but it's not likely.
Vincent?
No last. Yeah. Yeah, please.
We have a viewer question I just want to put to you before we let you go. This is a question from a viewer asking about what is arguably the beginning of a decoupling between the US and China around technology. And the question is, how do you play that decoupling, particularly when it comes to China? What are you looking to invest in China to take advantage of that technology decoupling between the two countries?
Well, I probably will invest in some of the sectors or companies that may not necessarily be the highest technological level, but be able to upgrade itself to satisfy a certain part of the technology demand in China. Because I think at the end of the day, the really, really high-end components, I think China will still find it difficult to really be able to produce. But I think some of the more easier to make components, which in the past China don't want to do it because it's too costly, too much investment. I think these type of components will increasingly be made in China. So for example, I may not be wanting to buy a company that are telling me that they are producing the world's most advanced semiconductor in China, because I think that might be a bit difficult. But if you say that, okay, it's targeting itself to fulfill the part of the bit of the mid-end demand in China, which in the past was supplied by foreign companies, while the Chinese government would like to replace that part. I think that positioning probably will be better.